Hi and welcome back to Cheeky Crypto. Today guys, we'll be jumping down into the charts for Bitcoin to see what's been going on with the price action of BTC and what I think is likely to happen next. As I get into this video, if you do find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, links in the description down below. Fantastic community talking crypto 24/7. I don't think you'll be disappointed by what you find down there, so why not check it out today? Right, let's jump right down into this. Right, so this is Bitcoin paired up with USDT. We are on the hourly chart, and Binance is our data source. Okay, so last time we spoke about this, we're talking about this C wave correction just down here. Essentially, we've got some interesting kind of moves that were going on, and we're looking to kind of finish these off with a C wave low. Right, so if I zoom out a little bit, we've obviously got this complex correction since $48,000. We pulled back down with an A wave, we pushed up with a B wave here, and what we're doing is we're tracking this C wave down lower. Now, it's not technically hit any impulsive trigger points, so that's all okay, but we want to be quite cautious over potentially dropping it down too low, because that would put us into a point where we would be considering this as a more impulsive structure to the downside. But at the moment, that isn't what we're seeing, so that's pretty good news, right? So instead, what we've got here is a lot of corrective moves that are going on. So for the most part, what we really do think, if I just actually tidy this up for a second here, essentially what I think is it's a larger A wave, B wave, C wave coming down. Okay, technically we've already met the minimum requirements for this, going down lower than our A wave, so lower than this point here. We've technically met the minimum requirements, but the most common would be putting us down at this low point of about $41,250 or so, approximately that kind of range. Now, there's no requirement to do so, but there is a probability that we are likely to see such a thing. Okay, and there's obviously a lot of noise inside all of this as well. Okay, so we essentially have these kind of moves going on here, where we had a 3-3-5 move just in here yesterday, like so. Okay, so 3-3-5, just up in here. These are all corrective patterns. They aren't, you know, basically a trend setter. They're not telling you the trend of an overall move. But essentially, I do think that we are likely to find ourselves moving down a tad further. But for now, we might bounce up a little bit further first. Okay, so if we take a look at this, what have we got? Well, we've got, you know, a pretty good move coming down here, and if we break this down into a 15-minute chart, you could actually say that it's 5 waves, 1, 2, 3, 4 and 5, right? But I think essentially on the hourly chart, it doesn't really look like that. It looks like it's a pretty clean just drop straight down with a bounce and then a pull back a little bit lower. So a couple of different ways we can kind of count it. We could count that as 5 waves down, knowing that there's some micro movements in there, or we can count it as some kind of ABC with a really short C wave. I think in time that'll become a little bit clearer, but the macro is still an ABC overall, and we'll just have to monitor that situation. Now, this little area right here, it could be concerning. It could be a triangle. And triangles would then actually indicate to us that this would be an A, this would be a B, and then we pull back down lower. Lower than this point here would essentially mean that we are an impulsive trigger point to the downside. Doesn't necessarily mean that structure is going to hold out for a long period of time, but it does mean that you would actually meet the requirements for it to be a 1, 2, 3 with a 4th and a 5th wave potentially on the horizon. Okay, all to the downside. So, you know, it'd be interesting to see how that plays out, but I don't think, you know, I'm not expecting that right now, but it is a possibility, so we're open to the idea of it. Now, as I come back down into that 15-minute chart, in order for this to be a triangle, it would have to meet some specific requirements, right? We'd have to make sure that, you know, everything that's going on in here basically aligns nicely to what you would expect of a triangle. Okay, so we'll just bring this up here a second, and we just pull that trend line in place. So essentially, some of the key things, and there should be 2 touch points on your lower trend line and 2 touch points on the higher trend line. 1 and 2, for example, 1, 2, and 3. Okay, so it meets those requirements so far. Each move to the touch point should be an ABC. Okay, it can't be anything else. It has to be an ABC. So knowing that potentially you'd have this as a bounce here, this being your A wave, maybe a B wave, C, D, maybe E, then a breakdown, right? But that's how people want to kind of count it. Now, for that to work, we'd have to have this as some kind of A, B, C. So that would be fine. We'd then have this as an A, B, C. That's also fine. Then we'd have to come up again. So we'd go A, B, C, barely fine, but okay. And then here we'd also have to go A, B, C, and that is also okay. Then we get into this one. Now, this one is not so easy to see. So if we were to measure this, it would have to come from that low point, move it up to here. And we haven't met the requirements for an impulsive point, so it's A, B, C at the moment. And I'm guessing that we would probably have to take it from here to here to here with a potential breakdown. Now, all of that is interesting, but what we're going to do is, so basically what we've done here is we said that they do meet the requirements for Elliott wave triangle. Okay, so let's go ahead and now just remove these out and grab our A through E, right? So we've gone A, B, C, D, E. Right, great. Now the E wave is unpredictable. It can go up and it can go down, and it could be anywhere, right? Now, because the E is at the top, it is indicating that the breakdown of this triangle is a downward move, okay? So essentially, if the E was at the bottom, it's an upward move, and because the E is at the top here, it's a downward move, okay? So we should be expecting some kind of breakdown. However, this is where things get a little bit more complicated and a little bit more interesting, okay? So let me go ahead and just delete that, and I'll delete these trend lines off of here as well, and then jump back up into our hourly chart. Okay. Now, if I bring the stochastic RSI back, we can actually see that we are pretty much just in that oversold area. We can pull back down. We absolutely could break down from here, and we could see ourselves hitting this low range of about 41,200, for example. However, I think there's a higher probability with that stochastic RSI where it is moving on up, meaning that that E wave hasn't finished, and maybe that E wave actually has to break upwards before it even pulls back down. And in doing so, what that would essentially do is create a big A, B, C move, and what we're looking for here is to bring that B up far enough that when we break down, that maybe we find support on these previous areas. Let me see if I can just zoom on out here, such as this one, right? This is being 41,500, okay? So it's possible that we have something like that, because that E wave doesn't necessarily look like it is complete. Now, the breakdown is going to be a requirement because we are pulling back our 4-hourly stochastic RSI after yesterday. Okay, so we're looking to bring that back down. The 8-hour also needs to come down a tad, but the daily's already in a really good spot, okay? Once this correction is complete, this macro ABC move, this is where I then start seeing the reversal, okay? So once we start to see a bit of a bounce to the upside. So if I now go ahead and bring this up into our daily view, the things that we've been talking about recently, is a larger ABC move to the downside. Okay, it does look like this could be 5 waves down before we get that bounce, which is a possibility. And if that were to happen, I would worry that many of the altcoins would basically lose their impulsive structures by crossing their fourth wave with their wave 1, for example. So we don't want this to go impulsive, but it is a possibility. It's not there yet, but if we were to drop down too much lower, we would see something like this. And it essentially means that we go down to $37,500 much earlier than expected. Then we get the ABC back up again, okay? So it's a possibility. We can't rule it out just yet until we cross higher than this point just here, okay? And essentially that point does come in at 44,200. So if we push past 44,200, then yeah, basically we'll invalidate that structure going down, which is good. Okay, and what we're really talking about here is basically this being a giant A wave, then we have a B wave bounce, and then we have a pullback for a C wave taking us down lower. Okay, so that B wave is incredibly important to many altcoins as their structures are impulsive in their nature. And when Bitcoin does this B wave, I would expect many altcoins to do their wave 5s. Okay, so there's a lot of things riding on this, lots of structure across the crypto space that is requiring Bitcoin here to have a B wave really, really soon. Okay, so I'm seeing a little bit more downside, but after that, I do expect this B wave to come in, and basically it should go higher than 44,200 to invalidate the impulsive structure going down, and essentially, you know, see us with a pretty decent C wave correction afterwards that basically drops a lot of the value out of the altcoins. Okay, so what will cause that? It could be something technical, it could be something fundamental, it could be something real world, black swan, whatever. But there's going to be a crash at some point here just to bring that in line with everything else that's going on here. Something is going to cause that, so just keep in mind that. Now the daily stochastic RSI is of course oversold, and this is what we're looking for basically within this B wave. We want to bring this right the way up into the overbought area within that B wave, and then we want to bring it all the way back down to oversold in the C wave. And this would line up nicely with our overbought, just coming out of overbought actually, weekly stochastic RSI, as we think about the correction all the way down towards this low range of about $37,500. Essentially, that would allow us to see this weekly chart back in the oversold area. It comes in, if I bring that from the high point to about here, it's about 21% for Bitcoin, which would be pretty reasonable and pretty much in line with what we had seen in 2021, about half of what we had seen though in 2017, 2018 timeframe. So good things do appear to be happening here with Bitcoin, but there's a little bit more volatility to be had, in my opinion, just to kind of finish off this hourly corrections, finish off these low points, and then we can carry on with a B wave bounce to the upside, and then many of those altcoins are going to rally at the same time. Guys, I'm going to leave the video there. If you have found this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. With all that said, done and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.